With SpaceX, our next guest takes a look into how the highly anticipated IPO can have unintended consequences on the overall market. Kevin Smith, Crescat Capital Founder, CEO, and CIO, joins here to discuss. Kevin, it's great to see you. Maybe you start bigger picture first, Kevin. You know, why does this SpaceX IPO matter so much, Kevin, for the broader market? I mean, it's SpaceX, it's Musk, it's space, it's exciting, but why is it more than just, one more hot IPO?
Absolutely. I think there's precedent here because SpaceX would of course be the largest IPO in history. We had and we're starting with a market cap to GDP for U.S. stocks of 230%. It's historic. Of course, we believe we are in an AI bubble, and we are at record valuations, but there is precedent. Like in the 2000s, we had record tech IPOs, and SpaceX is likely to go public at a $2 trillion valuation and raise $95 billion. This would be a record IPO. If you look at SpaceX, Anthropic, and OpenAI combined, the three of them would dwarf the entire IPO calendar on an inflation-adjusted basis for the entire year of 2000. So, so these are some of the concerns.
You talk about this IPO becoming a possible liquidity drain. Kevin, break that down for me. How does this one IPO, I guess, potentially pressure the broader market?
We have record crowding into large cap, mega cap tech stocks and into the U.S. indices and passive indices at large. These for passive, these stocks, these three stocks I'm talking about, including SpaceX, will be going into the indices like immediately, and all of the passive funds will need to be selling other stocks to rebalance. There is record crowding into this mega cap tech sector, and could this be the top? There's precedent and it was April of 2000 when we had during that tech bubble, we had the largest IPO in history. It was AT&T Wireless, and they raised $10.6 billion in April of 2000. But what happened? The market topped the month before. And there is a phenomenon where, this is such a large IPO, people are going to need to be selling other securities if they want to participate. So these things could be triggers. I don't know if this is the top right now, but there's certainly some signs that it could be.
So in simple terms, Kevin, it sounds like what you're saying is, okay, investors might sell their winners, right, includes those Mag 7 names, to raise cash to buy SpaceX. If you're right, Kevin, and let's say mega cap tech is vulnerable there to that, what are some other places to look then for investors?
Well, we think there are incredible value and growth opportunities, rotational opportunities in this market, in the material sector, and specifically in the precious and critical metals mining industries, where these are some of the raw materials that we need for the data centers and the AI boom and onshoring and defense and electrification. So we like a lot of the small cap opportunities in the exploration space. We're particularly interested in big new gold, silver, and copper discoveries. And I can give some names in our portfolio if you'll allow me to, that we're interested in.
Yeah, please do.
Okay, on the silver side, we like El Oro Resources. They have the largest new silver discovery of the last 200 years, and it's in Bolivia. It's an amazing new discovery. Silverbow Mining right here in Butte, Montana. They just went public in the U.S. here recently. Barksdale Resources in Arizona, their deposit is in Arizona. It's copper and silver. We've got some of the biggest new gold discoveries, tier 1 discoveries in our portfolio. I'd point you to three of them: Tectonic Metals, Sitka Gold, SITKA, and Goliath Resources. Tectonic is in Alaska, Sitka Gold up in the Yukon, and Goliath is in British Columbia. And then copper. Copper, we've got Magotes Metals in our portfolio. Magotes has a new discovery right next to Filo del Sol, which is the joint venture between BHP and the Lundin family. It's in Argentina, on the border of Argentina and Chile. And this BHP Lundin project is the largest new copper, gold, and silver project on the planet right now. And we have a new discovery at our company that we own, Magotes Metals, right next to it, that's of equal potential. I'd also point to Bell Copper and BCM Resources, two companies with assets in Arizona and in Utah here in the U.S.
Kevin, my last question, I just want to squeeze this in. Back to SpaceX real quickly. Let's say, Kevin, you have SpaceX, OpenAI, and Anthropic. They all make their public debuts over the next 6-12 months. Can the public market actually swallow all of that, Kevin, in your opinion?
Well, I don't think so. You look at the top 10, the market caps, post IPO of those three companies that you mentioned, they would all make the top 10 market cap companies. We have so much crowding into these top 10 mega caps now. This is a sign of a market top that we've seen in prior situations, the Nifty 50 bubble back in 1971, the 1929 market, as well as the 2000 tech bubble. But these top 10 companies alone, which would include Anthropic, SpaceX, and OpenAI, would be about equal to the entire GDP of the U.S. GDP. So this is an unsustainable valuation and unsustainable crowding in a narrow group of big stocks. These are market top type of signals like we've seen before, but these are at truly historic record valuations today.
Kevin, great to have you on the show today. Appreciate your time.
All right. Thanks, Josh.